Working from home as a business owner, whether you're a freelancer, consultant, or a small business owner, your workspace might just lower your taxes. Let's break down the home office deduction IRS style. First things first, this deduction is only for self-employed individuals. If you're an employee receiving a W-2, this might not be for you. So as a self-employed individual, you must use a part of your home exclusively only for your trade or business, regularly on a consistent recurring basis, not once a month, not on weekends only. Say you've got a small room that's now for your content creation space, used every weekday and only for business, that qualifies. But if you're working from the kitchen table between family dinners, that doesn't count. Before I proceed, here's a caveat of the IRS test: exclusive and regular use. Your space must meet the exclusive and regular use test. Exclusive use: no mixing business with personal use. Even walking through the room for non-business reasons may disqualify it. Regular use should be consistent, daily or several times a week. Sporadic or occasional use doesn't count. Since the business zone is now clearer than ever, let's move to the next question. What is the deduction? The IRS benefit allows you to deduct certain home-related expenses if they're tied to your business use. There are two types of expenses: direct expenses, repairs and maintenance done solely for your home office. These are 100% deductible. Indirect expenses, these are shared costs like rent, mortgage interest, insurance, utilities, and internet. You can deduct a portion of your expenses based on your office's square footage. Next, there are two ways to calculate. You can choose between the two methods. Actual method requires tracking and calculating the business use percentage of indirect expenses. This gives a potentially bigger deduction, especially if your home expenses are high. You need receipts, bills, and a bit of math. Simplified method, there's no documentation required. Just multiply the square footage of your office, limited to 300 square feet by $5 per square feet. Cap the deduction at $1,500. Where to report it? Use Form 8829 if you're using the actual method. This form helps calculate the allowable deduction based on your expenses and home office percentage. Results from the Form 8829 flow directly into Schedule C, which reports your business income and expenses. Simplified method, you can bypass Form 8829 and report the deductions rate on Schedule C, line 30. When to track expenses? For the actual method, tracking starts January 1st. That means keep monthly records for your home expenses, no changes like rent increases or moving. Document any direct expenses with receipts. For simplified, just measure your space accurately. Again, IRS allows up to 300 square feet, no guesstimates. Common mistakes to avoid: claiming your living room because your laptop's there, using deduction while working remote on a W-2 job, estimating expenses without documentation, forgetting to adjust if you move mid-year or change office space. Quick bonus: if you're working from home, don't forget the business mileage can be another deductible expense. Driving from your home office to another business location, like a client meeting, a supplier, or even the post office to ship products, that's deductible mileage. But here's the catch: you must have a qualified home office under the IRS rule. If your home is your principal place of business, then mileage starts from your driveway. Without a qualified home office, then your commute from your home to your first work stop is considered personal and not deductible. Two ways to track mileage: standard mileage rate. Track your total business miles, multiply by the IRS rate, and this is the easiest method for self-employed folks. Actual expense method, you track fuel, maintenance, repairs, depreciation. Then allocate based on business percentage. Most people use the standard method because it's cleaner and you don't have to keep every fuel receipt. Use mileage app like MileIQ or TripLog, or go old school with a mileage logbook. Just make sure you're recording date of the trip, starting and ending location, purpose of the trip, total miles driven. Quick note on mixing with home office deduction. Yes, you can claim both home office and business mileage as long as you're not double dipping. For example, you can't deduct vehicle expenses for working from home itself, but you can deduct travel from your home office to a business-related destination. Working from home doesn't mean you're grounded. If you're hitting the road for business, track those miles, they add up fast, so do your tax savings. So, is it worth it? If you qualify, this deduction can mean serious tax savings. Whether you go simplified or actual, make sure you track properly, follow the IRS rules, and file the right forms. There you go, home office deduction. Maximize your space, minimize your tax. Questions about which method suits you best? Drop them in the comment section or check out our next session. See you in the next one.